Zero down payment and low down payment programs have been with us for a long time. When people think of low down payment programs, they usually think of FHA loans. FHA loans have been around since 1933, and they require only 3.5% down, which is great for first-time home buyers. A zero down payment program, for most people, the first thing they think of is VA loans. And those are for veterans, of course. What do you do if you want to purchase a home and you're not a veteran and you want to, or you do not have a down payment? There's a program out there called the USDA Rural Housing Loan Program. It's actually been with us for a long time, but it hasn't really gotten the credit that it deserves and the recognition that it deserves, mainly because there's just been a lack of education about this product. What I'm here today to do for you is to educate you on the rural housing loan. First and foremost, it is designed for low to moderate income home buyers. If you fall under a certain income threshold, you may be able to qualify for this. This is something I can talk to you about at a later time or in a different video. As far as the area, the home does have to be in a designated rural area. Again, that is something where I can point out to you what areas would fall under rural housing. And then also the credit criteria, which incidentally is very similar to FHA credit criteria. So it's actually more flexible than, let's say, a conventional loan. But the beauty of this is a zero down payment loan. If you work with an agent that can also negotiate with the seller to pay your closing costs, guess what? You may be able to purchase a home with no money out of your pocket. Imagine being able to buy the home of your dreams with no money down and paying zero for closing costs. You can't even rent an apartment without paying some money out of pocket. So this is an ideal situation for you. But the other beauty of the USDA Rural Housing Loan is it allows you more purchasing power than, say, an FHA or a conventional loan. What I mean by purchasing power is it allows you to buy more of something with what you have in your budget. And the reason being is because the mortgage insurance premium is so much less on a USDA loan than on an FHA or a conventional loan. Let me give you an example. Let's say you want to keep your house payment, which is your principal and interest and your mortgage insurance. Let's say you want to keep that payment at $1,300 or less. At $1,300, if you did USDA rural housing financing, you could go all the way up to $245,000 here in Clark County based on today's rates. If you want to keep that same payment at $1,300 and you did conventional or FHA, you'd be at $215,000. So you can buy more home with USDA, in this case $25,000 more of a home with USDA than you could with an FHA or a conventional type of loan. $25,000, that's a lot. That can make a difference between a 4-bedroom and a 3-bedroom, or a 2,400 square foot home and a 1,900 square foot home. So to recap, no money out of pocket, more purchasing power, and credit guidelines that are as flexible as FHA. If you are renting right now and you're sitting on the fence, you don't like the pasture that's in front of you, it's really time for you to get off the fence and go to greener pastures and become a homeowner. If you want to know more about this product, you can contact me at 503-810-1119 or email me at paul.thompson@homestreet.com. Now is the time to act because this product is in high demand and sometimes funding ebbs and flows. So please give me a call as soon as possible and I can get you into the home.